All right. Good morning, ladies and gentlemen. It's Wednesday again, and welcome to the Investing Systems live show. Interesting day so far. Yesterday was pretty interesting, and it seems as though the character of the market has potentially changed a little bit here. And we're going to take a look around the market, take a look at some charts, and the usual look at. We only have a few open trades, so we'll take a look at those and kind of see what to expect next. So let's get going here. And as you see, everybody obviously knows about what happened yesterday. The market opened, everything was going along just fine, and the ISM numbers came out at 10 o'clock, and they were much worse than expected. ISM manufacturing numbers, and so now everybody's worried about a slowdown in the economy, right, and a potential recession, which is one of the boogeymen that's always out there, and it's nothing new. There's no, it's not like all of a sudden today or yesterday. I mean, that people started talking about the potential for recession. I mean, you remember, geez, I'm trying to think. I'm trying to think. Was it back here in like in the spring, summer, or was it over here? When we got that yield curve, when the yield curve inverted, right? And that was like the big talk for a few days, a week. Everyone was saying that a yield curve inversion portends a potential recession, right? And so, which is kind of true. And then, of course, everyone trotted out the old saying there with about the yield curve is that in the past, each time that the yield curve inverted, then there was like 12 to 18 months before the market peaked in the past, and so that was the sort of the standard talking point on that. And yeah, I mean the whole inverted yield curve thing, and obviously other countries over in Europe they've been having some signs. There's been a lot. Actually, there's been tons of signs of a global economic slowdown, right? And it's being blamed on the trade wars, obviously. Trump is blaming the Fed for not being more aggressive in lowering interest rates, and of course the Fed is and most other people are blaming the trade wars, right? And so there's a lot going on, right? And in October, obviously, the market for the whole trade war with China thing's been going on for well over a year now, and every time that there's a positive trade war headline, the market's rallied in the past on that. I mean, it's probably rallied 50 times on any given day in the past year, just based on a positive headline, right? Or Trump saying China wants to make a deal, or we're close to a deal, or whatever. It's kind of interesting, as many times as Kudlow has come out and say that trade deal with China is imminent and all that. So anyway, here we are. So trade deal does not seem imminent, quite honestly, and it's like the boy that cried wolf, right? With the administration talking about trade deal with China, and so I'm not sure how much firepower they have left as far as positive trade deal headlines. But there is a scheduled meeting in October, and so that's something to consider. Now, those of you that have been watching the show for a while, the past few weeks, the past few months, have known that I've been kind of harping on this idea that every time there's a Fed meeting, or not every single time, because there's a couple meetings I don't have marked on the chart here, but I've been talking about this, right? So the last September Fed meeting, right over here, market was at an all-time high, right up against this trend line, right up at the highs, and this is when the last time that the Fed actually raised rates, right? everything was going along fine for a few days. Then we got a little bit of a dip, and then and then we got this, and we know what happened subsequently. So, then I've got the April Fed meeting marked on here, and of course there was a couple in between here that I don't have marked. They obviously didn't have sort of a big effect. But anyway, market likes to run up, and then there's a Fed meeting, and then you get a sell off, right? And so, happened last September. Then you got another one in April, decent little sell off, and then this was a pretty amazing sort of sell off and reversal here. This is quite frankly, like this little melt up right here. I'll bet if you went back and looked at the news, there was some sort of catalyst, because that's not typical price action to see the market run up like that 4 days in a row. That was extremely significant. I just don't remember exactly what it was. Anyhow, fast forward to July, right? Funny thing about the July Fed announcement. Okay, so they lowered rates here, right? This is, I'm thinking back here in June is where the Fed signaled that they were basically at the end of their hiking cycle, and they were going to start lowering rates. I think that's when Powell did his 180-degree turn, right? So anyway, I mean the crazy thing is that the, the interest rates are 2%, 2.5%, whatever, and so Trump sent out a tweet yesterday blaming like the weak manufacturing on the Fed's interest rate policy. So it's hard to imagine that a quarter point here, even if interest rates went from 2% to 1%, it's hard to imagine that all of a sudden that would be a huge boom for the economy. But anyhow, so here we are. This is an interesting pattern on the chart. For one thing, let's go to the weekly real quick. For one thing, we got this overhead resistance line, and I mean that goes back to the beginning of 2018, right? Back to January 2018, and so that's and we got pretty close. I mean, we got pretty close just a few weeks ago, and this little sort of rally that we had. I think that the majority of participants, or a good number of market participants, thought that new all-time highs were in the bag. I mean, the high that week was 30.20, and the all-time high was 30.28, right? And so, yeah, 30.27.98. So, anyways, we came within 7 points of a new all-time high, and so it kind of felt like it was almost in the bag. But I kept watching that trend line, right? Because and you can see it how it comes in here on the daily. And so when we were up in this area, I was thinking, okay, there's a pretty big rally up there, and I was thinking that if they managed to rally it up to new highs, I was still gonna watch for that trend line to act as resistance. So, and it's amazing that you figure that that thing goes back a year, and a year and 9 months or 10 months or what? Well, yeah, a year and 9 months. So over 20 months, that trend line is still comes into play. And so, anyway, it's not going to come into play anytime soon here, based on what we're seeing on the chart. So, I wish I could draw like a little curved line here. There's no drawing tool for a curved line, but this is kind of a nasty little pattern right here. Now you guys know that when we were in all this craziness here, right? I had this like way back over here during all this craziness, right? I had a range drawn because it was a big range, basically. It was like a 120 point range, and the market traversed it, just a couple of days. And so this was extremely wild price action. And I even went so far as to put a middle line in it just because of how wide the range was. But Anyway, right now, um, I don't know if that's really significant, but what is significant at this point is, and I gotta zoom in. I just and fix this because I just messed it up. Um, this area that we went into yesterday, right? So this was the day the Fed cut rates for the first time this cycle. Everything seemed to be the next morning. Everything seemed to be going along pretty well, and then Trump, all of a sudden out of the blue, the very next day came out and said, he escalated the trade war with China. Basically, he said there was going to be new tariffs, and so the market reversed, and that was like this zone is like the low of that day. So anyway, we broke below it. This was like the Chinese devalued their currency or whatever, and so that was a massive 3 day drop. I mean, if you think about it, you know, if you think about it, the market was over 3,000, and in 3 trading days, it was down here at 2820. So that was pretty significant. Anyway, here's my point: is when you had all this craziness up and down and up and down, this was a big area of resistance, right? I mean, it poked up there multiple times, and then all of a sudden, this day, right? And quite honestly, I can't remember. I can't remember exactly what that gap up was about this day, but it just gapped over this resistance zone and went on its merry way there, and that was probably had something to do with trade, something, because that seems to be what's driving the market lately. Well, you got several things driving the market. You got trade war with China, the headlines and news on that. You have what the Fed's doing with interest rates, which is where these two circled days come in. These are both the days where they lowered rates quarter point. And then you have how is the global economy doing? Is the global economy slowing down? And of course, that goes hand in hand with the bond market and the inverted yield curve, and rates at like negative interest rates all over the world and all this craziness. And then over here, past couple of weeks, throw in all that noise with like the repo stuff going on, and so now the Fed's expanding their balance sheet again. There's talk of QE and stuff, so it's kind of I mean, there's a lot of news in the mix. Sometimes they say, or a lot of people say, I know people that say, ignore the news, just trade based on what you see on the chart, right? And so that, I mean, it makes a lot of sense. But in this day and age, quite honestly, you have to, in my opinion, anyway, you have to sort of follow the news. Or, I mean, like if you think about it, let's look at Well, I can look at this. Let's look at a 5 minute chart of yesterday, right? Um, and so like yesterday, if you weren't paying attention to any of the news, right? And then all of a sudden, when those ISM numbers came out, the market just plunged. I mean, in a split second, I was sitting here watching it on a short-term chart, and I mean, it just plunged in a matter, and then the rest of the day faded. And so, ignoring the news, I don't know how you could ignore the news, because you'd be too curious about what caused that sell-off out of the blue. And of course, reading any finance news or watching CNBC or anything like that, you'd obviously known what it was. So, so anyway, here's something that I find really interesting, and I'll move on here in a minute. But so here's my candlestick chart, right? I like to look at the open, high, low, close charts, but the candlestick charts sometimes are extremely useful too. And so, one thing that you can see on the candlestick chart is this: ever since the Fed meeting, right? I mean, the very next day we hit the high of this cycle, right? And so, which is kind of funny because I had been talking about that for some time, and it's really not. It's just the proclivity of the market to have a sell off that begins shortly after a Fed meeting. And it doesn't happen every time, but I just showed you we can go back like, five Fed meetings, literally like five. I mean, going back to the big sell off last year. Am I counting that right? Or is it four? Yeah, one, two, three. All right, let's just call it four. But there's four Fed meetings where, and this was 8% sell off here, right? And of course, this happened so quick that CNBC was doing like markets in turmoil specials, right? So, but I mean, the proclivity of the market to sell off shortly after a Fed meeting is just something that I happen to notice on the chart, right? And well, obviously, whether that's just coincidental is subject to debate. But this time around, you had the Fed meeting, and the Fed said they're on no preset course, obviously, and they're just winging it like they have been. And so the very next day, you basically that was the day that you got to 30.22, and the previous all-time high in the history of the world was 30.28. So you got within 6 points of a new all-time high in the history of the world. The high on the day after the Fed meeting, and then you started to see these candles, and I mean, I see one, two. This is pretty much of a long range day, with a big red body, and so there was a few of those, and then you'd have a little reprieve in between them. And then so yesterday, that ISM news, I mean, that sort of, yeah, that just threw a monkey wrench into everything, right? And so what you got now is you got sort of, what kind of looks like a double top, even though you can draw a slight downtrend line across these highs, right? Slight downtrend line. I mean, it's about if you zoom out, it's just basically, sort of a double top looking pattern. Now, the funny thing about this is that let me go back to my standard chart here. Yeah. Um, I had I had a trend line drawn on this chart that looked. I took it off, but it looked like this, right? So I like to zoom in on the price action and see exactly what's going on, on a real super short term time frame. And the reason I like using this particular chart on the show is it's real clean, right? I mean, I got some charts with tons of moving averages and indicators on them and all that type of thing, but this chart, the real clean chart, I think works pretty well. So this is something that you don't see too often, right? So Fed day, and then you got that little sort of reversal to sort of spike high, like a pivot high. It was a pivot high day, right? And then you started to sell off a little bit, and then anytime you see like a long range day like this, I mean that was a bearish engulfing candle, big long range day shortly after the Fed day. That's a warning sign. That's like a yellow flag type thing, right? And so anyway, it made sense to me to draw this downward sloping trend line. And so here's the funny thing is that yesterday morning, market opens, and then in the first 30 minutes or so, it started to break that trend line, which I'm going to guess. And the other thing was it broke above all these highs right here, right? I mean, the highs, it was making a 5 day high or a 4 day high right here yesterday in the first 30 minutes, and then boy, that ISM number, I mean, that was meaningful. And the funny thing is that and I've been seeing a lot of talk of this. The market for a long time has tended to ignore bad news, or ignore bad economic numbers that come out. And one of the reasons for that is that it's kind of funny. If bad economic numbers come out, then that just increases the chances that the Fed is going to cut interest rates at their next subsequent meeting, right? And so that's sort of the that's sort of the funny thing is that funny thing about people talking about uh, economic number. If the economic numbers are good, then that means that corporate earnings are going to be good and the economy's doing fine and the market should go up. But if economic numbers are bad, then that means that there's more of a chance that the Fed's going to lower interest rates or whatever, which the market obviously likes. And so, it's like heads you win, tails you win, right? So, anyway, long story short, finally the market decided that the manufacturing PMI and all the factory stuff. And I mean, it was at a 10-year low, too. That was the headlines at Reuters were saying that, factor the and I'm not an economist, and so I get my terminology mixed up. But basically, the ISM, that the gauge of manufacturing or whatever, is at a 10-year low, and so that made people stand up and pay attention, right? So anyway, so there's where we are. And then so you get these long. So there's a little fake out yesterday, a little bit of a fake out, and then this thing started dropping. I think it took a lot of people by surprise at how much it really sold off. But bigger scheme of things, this is sort of you get these long range days down and then these little reprieves and then another one comes, and I see this on a lot of stock charts too, individual stocks. You get that first big down day, and then everything seems like it's back to normal or whatever, and then this is the other shoe that drops, right? And so it was actually interesting that it literally closed that gap that had been open for so long, right? I mean, that was what day was this? This was September 5th, right? And so from September 5th, it took all the way to October 1st to close that gap right there. So now that gap's closed, right? And that was a pretty big gap there, and it was kind of interesting. And so here we are. Here's something else sort of interesting before I move on. As long as I'm talking about the S&P, if you go back to if you go back to here it is. So you go back to like this high back here, 921, 2018. The high that day was 2940, and the close yesterday was 2940. And so and so literally it was like a year, right? Like an entire, and you could put a horizontal line right there, and so from September 21st, and so basically, like here you are. There was October 1st, right? October 1st of 18, you're at 29.24, and look where you are. You're actually below it now because of today's additional sell-off. So I mean, here you are. The market's gone nowhere in a year, and quite frankly, I'm gonna put a line on there just to kind of show this point here. Let's see. I'll make it black so it kind of stands out. But so you put this line on the chart here, and I'm putting it like yesterday's close, right? Obviously, we can see what the market's doing today, but um, so you go back a year, and the market has spent a lot more time below that level than it has above it. so so anyway, there's some it's just kind of interesting because if you just go back a year, you can say, the market's gone absolutely nowhere, and so and then of course you can also if we get additional follow through to the downside, imagine this. This was the end of January of 2018, and that would be a long time for the market to have gone, with without really getting anywhere. So I mean, and the other thing is that if we were to sell down there, right? And at the time, that high was 28.72, it looks like. Yeah, that was a high, January 26th. 28.72, right? Right there. And so at the time, we had just had a parabolic run up to that. And I mean, the animal spirits were out. I remember that. Nobody could think of any reason in the world the market would go down back then. I mean, we had this just massive run up at the end of 2017 into January 2018, and at the time literally, like, nobody could think of any reason, anything that would stall the market out. And then of course, this big sell off back there, I do remember this is because interest rates all of a sudden started going up. Interest rates like started going up for, I don't even remember the reason why, but it really spooked everybody. So anyhow, look at that line and look at how much time the S&P spent below the line as opposed to above it. So anyway, this kind of pattern right here is that we're looking at right now is kind of is a little bit iffy, and so I'm not sure exactly how to draw this lower trend line, but I'm gonna say that that looks about right. You go to go back to my candlestick chart there, and on a candlestick chart, that looks about right. You can draw it a couple of different ways, but close enough for government work. So there you go. There's there's a few different things you could look at here. You can look at this, or we could draw that trend line like that. That probably that probably makes the most sense, right? So there you go. I mean, trend lines are very useful. They don't really necessarily, like, the market could go down and break this trend line, bounce around, and then just rally back up, right? Anything can happen, but I mean, still, trend lines are, part of technical analysis, and so generally speaking, you're going to see some support at a trend line, and when trend lines start getting broken, look out. But the crazy thing is that the market closed that gap and literally closed right on support yesterday, right? In the past, we've seen a lot of times where you get like a sell off, and then at the end of the day, there's a bunch of buyers, and then overnight there's a bunch of buyers, and the next day you get a gap up, right? You get a gap up, or like over here or whatever, and a lot of times those big, and even back over here, you'd have a big sell off like this. The next morning, you get this big gap up, and people would say, "Oh, well, yes, the selling was overdone," and so a little bit of the characters changing a little bit, and of course, everything seasonally this time around has been a little bit off, right? Like, usually get the summer doldrums in the summer, like July and August. August was the exact opposite of the summer doldrums this year. The summer doldrums basically were most of September, right? I mean, the market was like, once you had this gap up here, the market was relatively dull for, most of the time, honestly, all the way up until 9/24, right? The market was pretty dull. These couple of weeks here, there was just not much going on. But another thing is that under the surface, individual stocks, there's been a ton of damage, right? Let's look at some of these things, like Facebook, for instance, right? You can see. The only problem with marking all this stuff up on the charts like this is that he's like this swing trade we had in Facebook here ahead of the last earnings kind of clutters up the chart a little bit, but anyway, Facebook's kind of nasty here. It's got kind of it's kind of like a head and shoulders with this little area down here. But you can see like this is the head part and these would be like the shoulders, and so Facebook not looking so hot here, right? Um, Amazon Amazon looking a little sketchy. I mean, here's the thing, it's been over a year. That was 9.4. It's been over a year since Amazon's made a new high, right? I mean, not that that's a huge big deal, but again, you just got kind of a double toppy looking pattern here, looking a little bit rough here. Here's another thing to note is that you got you got this sell off here, right? And then you got this beautiful like sort of bottoming, W looking pattern right here, and it broke out of it, right? And so you would think, well, you would think that like when it broke out of it that you'd get the next move higher, but instead it's broken down, right? And so that's pretty nasty. When you this is obviously Amazon is a must-own stock and extremely widely held and one of the bellwethers of the market, and so that's kind of there. There's a lot of support down around this area, but the simple fact that it didn't cycle back up, when it would have sort of made sense to. Like it would have made sense to sort of cycle back up over here, and instead it broke down, and now it's below like that little it had a sell off, and it's below that, and so um, Netflix is ugly. This is a pretty nasty looking chart here. It's just fun to look at the Fang stock. I mean, here's the thing. I'm about to look at our open trades, but there's not a whole lot. There's not a whole lot to look at. Like we got what, four open trades here. So I wanted to take a look at some other stuff first. Yeah, Netflix is looking nasty. I mean, these are it peaked, last year too, failed to make a new high, and so here you go. You got I mean, hey, you get these kind of sell-offs, and then the season changes, and you get like look back here at this trend line break and what I had marked back here, and this thing just exploded higher and doubled, right at the beginning of 2018. But anyway, so here you are. That's a ugly looking chart there. Last Fang stock Google, just in this big gigantic choppy range here, but um, a lot of like what I'm gonna say is like sort of the leaders or whatever. This is what's kind of funky here is let me pull this out a little bit. A lot of the stocks that you could say were sort of the like the market leaders have really gotten hit. Here's something that amazes me. The cannabis stocks, right? Look at this. This is a brand new cannabis ETF. It came out up here the first day. It was at 24.93. Call it $25, right? So they launched this brand new cannabis ETF, and goes starts at $25. And I mean, look at this, just and I mean, here's the thing: is like I started looking at this the other day, right? Because I was looking at I was looking at this MJ. This is the other. This is the original cannabis ETF. And you know how like a couple of years ago, everything was like Bitcoin this, Bitcoin that, and that's all anybody would talk about was Bitcoin. And then it seems like last year or whatever, and yeah, everybody started talking about cannabis stocks and pot stocks and all that. And so we just look at these things, right? And so I quite honestly, I don't know any, I couldn't tell you, I couldn't name, well, actually, there is one. It's called TLRY, Tilray. That's the only one I can think about because I remember it going like ballistic or whatever, but and another one, CGC. So, anyways, my point here is that there was a lot of hype surrounding the cannabis stocks, and you can see that at this point in time they've turned into an epic disaster. And then so look at this, a new pot stock ETF comes out literally like 2 weeks ago, and just dropping. So um, look, here's something. This AYX, right? There's a lot of look at this thing. I mean, this has been one of those sort of market leaders. It's probably been on the IBD 50 list, perennially. And so when you start to see these market leaders get hammered, which we've seen a lot lately, we've seen a lot of the market leaders sort of getting hammered, right? And Twilio, right? A lot of they call them SaaS, software as a service stocks, right? And so these things have been rolling over, and so they're like sort of the canary in the coal mine. Let's see, there's a couple of, let's look at Adobe. So the software stocks were the big, growth area. That's where all the institutions were playing. That's where the IBD, you know, best charts and all that. And so they started getting hit. They started getting hit. Look at PayPal. Back in the summertime, you got a big sell off in all these market leaders. And so, generally speaking, when that happens, Square, right, that looks like an earnings gap down. But generally speaking, when you start to see these market leaders get whacked, then that's a warning sign. The high momentum stocks, right? You remember that a couple of weeks ago, everybody was talking about, value stocks are coming back into vogue and they're selling momentum stocks. He says, Anyway, let's get back to let me get back on track here. Fix my screen a little bit. And we'll take a quick look around. Well, I want to look at like the open trades that we have now. Let's see how they're doing. Obviously, Apple. Um, Apple's been a pretty nice. It's been a pretty decent little swing trade here this last cycle around. Trigger back over here, 210. There's the open, the day following the trigger. Nice little run up. Hit the target pretty quick. I don't even remember what this big up day was about, but basically, nice little run up there. And then it's just been sort of waffling around, and amazingly enough, this trailing stop has been working pretty well. It stayed at 217 for the longest time. I thought for sure, like I believe it was this day, like this day, or even you're actually prior to that, that it was there, and I thought for sure like this day it was going to get hit, and then thought for certain this day, and it was that big gap up. But anyway, it was amazing. It literally like just ratcheted up. It was 217 day before yesterday, and then last night's update it ratcheted up to 218.50. But the funny thing is, it got upgraded. I think it was J.P. Morgan or something yesterday. I don't know. One of the big firms upgraded Apple yesterday, and it's like, and look at that pivot high, right? What a day to upgrade Apple after this big run up. That's the hilarious thing about it. It this was the earnings spike here. There's the last time they released earnings, and that was another sort of, it runs up into earnings, has this humongous gap up, spike reversal, and then boom, it's down. And so, you know, anybody that bought Apple, like if you bought it, I remember seeing a segment on CNBC the day before they released earnings. Should you buy Apple ahead of earnings? And everybody's like, yeah, buy it. And so, I mean, if you bought it, right, but and didn't sell it, then you were hurting, right? And it took a while to come back. But anyway, the funny thing is, if I could take all this stuff off the chart without losing it, but you get this huge run up, right? And then it gets all the way up here to the high, and it gets upgraded by JP Morgan, and then boom, spike high. I mean, here's the thing, why didn't they upgrade it like, here? So it's just kind of funny, but anyway, Apple's still holding on. Won't surprise me to see this thing get closed. I'm just going random on the list. ZTS, um, fortunately, fortunately, the trailing stop came all the way up here to break even, right? And so that's sort of, you know, it starts off wide, it comes up quick, and here you go. Within a week and a half, trailing stop up at break even, taken out at break even, no big deal. And the funny thing is exactly break even. So there we go. Hershey is amazingly. I had somebody email me about Hershey yesterday, but amazingly, Hershey holding on pretty well, right? Look at yesterday. I mean, yesterday it didn't even flinch. So, and I mean, it's basically, just kind of in this sideways range here, and that stop's pretty darn tight. I mean, that's a super super tight stop for $150 stock, and you're talking $2, right? But here's the thing: is like, I mean, this is a beautiful uptrend, nice little sort of pullback sell off, and then you get that perfect pivot low right there. Stock starts coming back up, and so everything about this is what you call high probability trade, right? And so you know, depending on the market environment, and I would say that October's probably a great. It makes sense with Halloween. People go crazy over Halloween. I mean, this is a good looking pattern here, and so quite frankly, depending on what the market does here, this one could go either way. So that's one could go either way, and there's a couple different things about this. Like in theory, in the longer term sort of view here, there's the bottom of the pattern, and so but this is typically a slow moving stock. I mean, just on a daily basis, it just creeps, but it tends to be it tends to creep up in an uptrend, and so after this pullback happened and it started like resuming the uptrend is a pretty good time in the bigger picture to jump in, but um, sort of the nature of our system is if they don't start working out right, then that trailing stop comes up as quickly as possible, and it'll take you out for a really super super small loss if it doesn't continue the trend higher. So as I look at this chart, I mean, there was a couple of spots here, like back towards the end of 2018, you had a lot of choppiness and sideways trade, and it wasn't trending here, right? It was just chopping around sideways, and so this would not have been a good time to get in it, and you could have held on to this thing for 4 or 5 months and not gotten anywhere. And so same concept here, right? But in theory, like this is the if you were like a long-term investor and bought this stock as like to hold for the next 5 years, there's where you'd want to put your stop. From a swing trading perspective, and what our system does, it either trends higher and the stop goes up with it, or if it starts to go sideways, that stop just comes up, and then any sort of pullback's going to just take you out. So, and that's the whole thing, cut your losers quickly, let your winners run. And so, and last but not least is Estee Lauder, which looks to me like 192.50, low 193 here. This just looks like sort of is going to be a victim of this market sell-off. I mean, this was on its way to doing something here, right? This is a really nice pattern. Look at this perfect pivot low reversal day right here. It's a thing of beauty, right? I mean, the pattern's a thing of beauty, but the thing of it is that patterns fail when the market gets nasty. So you had a really nice sell down, perfect pivot low reversal, and a few days here where it was kind of, and you can see you can see how that trigger right there came in like right at the perfect time. And so this thing was literally like was on its way, and then you get these market sell-offs like this, and it's just it's like the old rising tide lifts all boats. Well, this is the opposite of that. I mean, you get into these cycles, and so I mean, consequently, here's another one. So $2.50 on $195 stock is just negligible stop loss. Negligible. I mean, even a stop at the bottom of the pattern down here. You know is negligible in the big scheme of things, but the nature of it is that we're looking for forward momentum to continue, and if it doesn't, then we're going to cut and run. And so that's why we take like a lot of small stop outs, 1-2%, 2-3% or whatever. And then the idea is like Apple or whatever is up. Apple was as of yesterday was up 6%, or I'm sorry, 7%, which is a lot. There it is. And here's another thing to sort of keep in mind, and I'm going to wrap this up because there's not a whole lot to say. Um, the other thing to keep in mind is that notice how it like all of a sudden we're getting this big market sell-off, but we've only got a few open trades here, and so that's kind of how it's supposed to work. Like you don't want to be like holding tons and tons of stocks when once the market starts selling off. And so things have been really sort of tightening up. We've had a couple of decent trades close. We've had a couple of small stop outs, but everything seems to be humming along pretty well. And the thing about it is that it's perfect. It's like the perfect sort of place to be is to only have a handful of trades open, and those stops already have moved up, and so we can kind of let the dust settle here. Boy, look at this sell-off! Wow, sell-off's gaining some momentum, so it's really gonna freak people out. I mean, like clockwork on October 1st, right? September is historically the weakest month of the year, but October is the one that everybody, always talks about because of the crashes and that. And so anyway, I mean, here we are, we're back to like this is reminiscent of this August sell-off here, right? Gaining some momentum. So it's going to be interesting to see, and basically all you can do is sort of let the dust settle, and when the market's falling like this, there's not going to really be any stocks triggered. Now, people talk about going short and this and that. You're going to see a lot of doom and gloom, and quite frankly, I erased this line I had back here, but I mean, when the market rallied from the beginning of the year and then had this little pullback to this level here, like nobody even batted an eye, right? Nobody batted an eye. And then this sell-off was, I mean, it was 8%, but it was still, what they call garden variety, right? Just a normal sort of sell-off. Yeah, I erased that line from here for whatever reason, but if you think about it, nobody was panicking here. Nobody was really panicking here, although that was a significant sell-off. And so everybody started freaking out because when the market falls like really quick for a couple of days or a few days or has like one huge down day, that's when everybody freaks out. If it just like slowly sort of grinds down for a month, nobody really pays a whole lot of attention to that or worries about it that much. And so anyway, there you go. That's a long way down from here, but I would keep my eye on this trend line. We're already like pretty much oversold, right? From just like recent price actions. So you may see something like this, and then touch this trend line or somewhere close to it. Everybody's freaking out, um, and then you'll see like a big sort of reversal spike up. But when you start getting these long range days here, it's best to just sort of let the dust settle. So anyway, let the dust settle, right? And so it'll be interesting to see. We may end up with like one or zero open trades, and then the system is just going to let the dust settle, and then find some of the stocks that are set up for a reversal back higher, stocks that are still in uptrends. And so that pending list is going to be interesting to watch. Now, you may see a lot of stocks just completely disappear from it, like stocks that were potentially. I know I saw USO on it, and let me look at that. Yeah, USO is I mean, it just depends, right? You get a big sell off like this, and then you could get a decent V reversal, but yeah, that's pretty amazing, right? This is the Saudi thing or whatever, and that day everybody was a buyer of oil stocks, and I mean literally, there's XOP, there's the energy services. I tell you, it's such a news-driven market. I mean, I watched CNBC right here, and man, all of a sudden everybody was in love with the energy stocks right there, and so it just goes to show you this is actually the broadest ETF energy stocks. A lot of these news events, they have a really short shelf life, and so don't get too caught up in that, right? Because you won't be talking about it in 2 weeks or a month or whatever. So just interesting to see that. Let's look at the IWM real quick here. IWM looking particularly nasty, considering it's been a year since it made a high, and it's a long way. It's closer to the lows than there's a bunch of support on IWM down coming up shortly though. So, you know, the market's been kind of sucky for a while, and I attribute that to the fact that the Russell 2000, has not been participating in this rally. If you dig under the surface, you got a handful of big cap stocks, Microsoft and Apple, and even the FANG stocks are starting to not do so well. But you got a handful of big cap stocks that seem to be, Home Depot, that seem to be just sort of have driving the market like not even like the nifty 50 days or whatever, and that's not a real healthy environment, right? The market's a lot more fun and a lot better to play when the small caps are doing better. So anyway, big sell off here creates opportunities, and so we'll just have to let the dust settle and see what happens. And so with that, I'm going to let you go, wrap it up for the day, and I'll see you back here next week. Thanks for tuning in.